Welcome back to the Neuro Finance Masterclass. Today, on day 110, we map the ultimate emotional architecture of the blockchain.
That is exactly right. Yesterday, we audited the physical supply floor using the pool multiple, which was a masterclass in the hard, unyielding mechanics of network issuance. But today we're pivoting. We're pulling you away from those physical lessons of supply and demanding that you focus on literally the most volatile, unpredictable element in the entire financial system, human psychology.
We are going to take the psychological noise of the market and distill it down to its absolute objective core. We are taking the sheer chaos of human emotion, all that panic and greed, and turning it into a precise, cold science.
So here's our blueprint for today's explainer. First, quantifying emotion.
Second, breaking down the exact mechanics of the NUPL formula.
Third, mapping out the 5 psychological phases. Fourth, constructing the macro portfolio filter. And finally, putting it all together with the sentiment audit. Let's transform that chaotic sentiment into executable mathematics.
All right, section 1, quantifying emotion, turning sentiment into math.
Let's address the core problem every single investor faces, the absolute blinding roar of emotional noise. Look, amateurs treat market sentiment like a chaotic wave. They scroll through social media and just get bombarded, right? Panic, greed, desperation, euphoria. They're constantly reacting to panicked videos and sensational headlines, completely tossed around by the storm. But architects? Architects absolutely do not trade the news. They extract collective greed and fear directly from the blockchain and turn it into pure executable math. They are literally mapping human emotion directly onto the ledger.
Which brings us to section 2, the NUPL formula, calculating paper wealth. Now, this equation is beautifully simple but endlessly powerful. Net unrealized profit loss, or NUPL, is calculated by taking the market cap, subtracting the realized cap, and dividing that result by the market cap. To truly scale your psychological edge, you have to know exactly how much paper profit or paper loss the entire market is currently holding at any given second. The top part of this fraction, it reveals the exact total net unrealized profit or loss sitting right there in the system. Let's break down those inputs just to make sure our foundation is rock solid here. Market cap, as we discussed back on day 91, is the current floating paper value of the entire network. Simply the current price multiplied by the circulating supply.
Exactly. And realized cap, from our day 108 lesson, is the actual physical cash spent to acquire all those coins based on the exact price they last moved. So, by subtracting the real cash spent from the current floating value, we instantly expose the exact amount of unharvested wealth, or, in a bear market, unharvested pain in the network.
And then, by dividing that difference by the floating market cap, we normalize the data. We get this beautifully clean, single percentage metric that scales precisely between -1.0 and +1.0.
Which means whether an asset is priced at $10 or $100,000, human greed looks exactly the same mathematically on this oscillator. It gives us a perfect, constant read on the collective psyche of the market.
Moving to section 3, the 5 psychological phases, the architect's grid. Historically, the NUPL metric shifts through 5 completely distinct psychological phases with astonishing structural accuracy. Seriously, it's almost frightening how predictable human behavior becomes when you view it through this mathematical lens. From the agonizing depths of capitulation in the red zone, all the way up to the blinding heights of euphoria in the blue zone. We are mapping the exact thresholds of human emotion. Let's start right at the bottom. Phase 1, capitulation. This is where NUPL drops below 0. Into the red zone. This means the total market cap is actually lower than the price people paid for their assets. The crowd is in absolute agony, suffering massive collective paper losses. This right here is where panic selling peaks. The amateur, completely broken by the emotional toll, liquidates their portfolio at a massive loss and quits the market forever. But the architect? The architect sees maximum fear, and they execute heavy, systematic accumulation. They buy the capitulation.
Then, as we crawled out of that abyss, we hit phase 2, the orange zone, hope and fear. NUPL sits between 0 and 0.25. The market is slowly inching back into minor profit. Investors here are incredibly cautious, literally terrified of another devastating drop. Then phase 3, the yellow zone of optimism and anxiety, from 0.25 to 0.50.
The rally builds a sustainable foundation, genuine capital flows back in, and the public narrative turns tentatively positive. Next is Phase 4, the green zone, belief in denial, ranging from 0.50 to 0.75. Investors are fully convinced a massive bull run is active now. Dips are aggressively bought, and minor corrections are just casually dismissed as noise.
And then, the cycle peaks. Phase 5, Euphoria and Greed. The NUPL crosses above 0.75 into the blue zone. Guys, this is the absolute danger zone. At this mathematical threshold, over 75% of the floating market value consists of pure, unharvested paper profit. The greed is downright intoxicating.
Oh yeah, this is that manic environment where your taxi driver is suddenly a crypto genius and social media influencers are guaranteeing your early retirement. The crowd genuinely believes the numbers are going to go up forever.
But while the amateur takes out loans to buy even more, the architect operates strictly on the temporal signal. When NUPL crosses that 0.75 threshold, it is a glaring red alert. The architect totally ignores the late-stage green candles. They ignore the hype. Instead, they systematically execute their exit strategy during Euphoria, harvesting those massive paper profits and moving them safely into stable reserves. Just as we learned back on day 102, they sell into the crowd's greed.
All right, Section 4, the macro portfolio filter, synthesizing NUPL with ELR.
Here is your ultimate defensive strategy. When you combine today's NUPL data with the estimated leverage ratio, or ELR, that we mastered on day 105, your macro filter becomes practically impenetrable.
Exactly. Think about it. Condition 1, NUPL hits the blue Euphoria zone, meaning paper profits are dangerously high. Condition 2, the ELR shows extreme spikes, meaning the crowd is heavily leveraging those unharvested profits with borrowed money. The result? A phenomenally high mathematical probability of a catastrophic correction. When both of these light up, smart money loads their stable gun and prepares for the crash. They absolutely do not chase the rally.
And finally, Section 5, the sentiment audit, your final cognitive task.
I want you to internalize this directive right now. Open your advanced on-chain data suites today, whether that's Glassnode, look into Bitcoin, whatever platform you use. Pull up the net unrealized profit/loss indicator. Stop trading the noise, audit the crowd's mind, track the paper wealth, and rule the cycle. You need to identify exactly which of the 5 emotional phases the network is currently experiencing right at this very moment. And once you have that data, compare it to your own portfolio distribution. I want to leave you with this piercing introspective audit. Ask yourself, are you letting crowd euphoria trick you into taking excessive risk right at the market top? Or is crowd panic in the red zone freezing you with fear, stopping your dollar-cost averaging machine exactly when you should be accumulating the most? You now have the mathematical tool to strip away the illusion. The only question is, do you have the discipline to actually use it? We'll see you tomorrow for day 111.